I think we are very honored and delighted to have him with us today. So I would like us all to give him a very warm round of applause, a Kenyan style one. Thank you, thank you. Welcome. I want to just recognize a few distinguished individuals. You will bear with me. Almost everybody here is a face that we see on TV, so I will just mention a few. Mr. Chris Kirubi, welcome. Madam Stella Kilonzo, we are happy to have you. Mr. Patrick of Bath, who is a good friend of mine, we are happy to have you here with us. Dr. Boer from the Tony Elumelu Foundation. Mr. Ngugi Kiuna, Chairman of UBA Bank Kenya Limited. It's our pleasure. And Mr. Muyiwa Akiemi, my brother from the north, MD UBA Kenya Bank Limited. Welcome. Then after that, I'm going to handle a few housekeeping issues. First, let me apologize for those of you who had trouble with parking. As you can see, I think we need to expand our space, but we are actually doing that. So next time you come, we can guarantee you will not have too much trouble. Then secondly, there is no fire drill planned. I think it would be not very wise to plan for a day like this. So if you hear a fire alarm, please take it very seriously. The assembly point is outside the business school. Then thirdly, in case you haven't located them yet, the toilets are also in the SBS, the small red building just outside, opposite the entrance. And then finally, and you'll be surprised how many people don't realize this, the mobile phones have nowadays improved so much that they all have a silent mode. So in the event that yours is not on one, please put it there so that we do not have any interruptions during our discussions today. Now, I will not keep you very long today because, I will acknowledge that being not a manager myself, I'm noticing that almost everybody here is one of those. I believe in the words of Joe Robinson that managers have an irrational fear that they need people in all those chairs all the time or everything will fall apart. So if I keep you too long, some of us might lose our jobs. So I am now going to invite the Dean of the Business School, Dr. Edward Mungai, to come and take us through the rest of the program. Dr. Mungai.
Thank you, Stanley. Our chief guest for this morning, Mr. Tony Elumelu, the founder and trustee of the Tony Elumelu Foundation and chairman Health Holdings Limited, the director, the CEO of the Tony Elumelu Foundation, Dr. Weber, the regional directors of ABA Bank, the CEO, directors, management and staff of UBA Bank Kenya Limited, all distinguished guests, our alumni, faculty, staff, students, colleagues, ladies and gentlemen, on behalf of Strathmore University Fraternity, it is my pleasure to welcome you to this very unique event, which, as you may well see, is one of the best we have had so far. So as Stanley has mentioned in the introductory remarks, I think because of the last two announcements we put in the place, yesterday we got quite good number of confirmation, and the usual African culture, we didn't want to say it's full. So we tried to accommodate, hoping in quote, that some people will not turn up. But it turns out that this is one of those events that everyone who confirmed has turned up. So you will bear with us for this. So I also want to appreciate the people doing the catering, because I know they have had to change the tables this morning just to take care of this. So you understand why we started a few minutes late. For that reason, I'll make my comments pretty short so that we can go to the main item that has brought us today this morning. You may ask why we have hosted the event, and I want just to say that we share 3 common values with the Tony Elumelu Foundation. First is a vision on Africa. As you may have come in, you realize that we have a big construction project going on. And if you look at the theme of that project, we have deemed it Transforming Africa Through Leadership. So if you read the materials we sent you and the announcements, I don't think I want to expand on that. Okay, this is quite good connection. If you check the website and the details about the foundation, this is quite clear. The only thing that has changed with that project is when we started it, we are talking of 3.65 million euros as the cost of the project. Now it becomes dollars. So a lot has changed. What was used to be the value of euro now is the value of the dollar. So that tells you that our cost of the project has significantly changed because of fluctuation rates. But the principles remain the same. The second thing that we share in common with the Tony Elumelu Foundation is something that those alumni of Strathmore may well recognize, which is we, even with this African perspective, we recognize that every human being in the world has a role to contribute. And therefore we have a global picture. We do not believe we have everything that is good in this part of the world. We believe other people from other parts of the world have a lot to contribute. And therefore, if you again check on the website of the foundation, the Tony Elumelu Foundation, you actually find that they have adopted that. One of the reasons that we are quite connected is that there is the African Market Internship Program, which is one of the projects under the foundation, and we have signed up for this project. Now, this project pairs graduates in Africa with graduates from other parts of the world and joins them up to support an African-based institution, a company mostly, and grow that. And if you check, that means we are able to accept what is good from outside, match with what is good from inside, because sometimes the best practice out there is not the best practice here. But there is something surely that we can learn about the best practices there. So Strathmore also has this idea of an integrative mentality. Our motto is that all may be one, which is a foundation spirit. It's based on a Christian principle that we respect human beings as human beings. Okay, so we accommodate everyone. That point of what we share in common is that the family, as we define it, is a very important element in building society. You cannot build societies from the air. Children are born in a family. Okay? And again, I don't want to go to the details of that. Look at what the foundation is doing. And accuracy. If you just Google the internet and check Mr. Tony Elumelu family and what he has been doing, I was quite impressed, because now you can't hide what you do in private life. The pictures are out there. The importance of realizing that even as we succeed as executives, we still have a home and we have a relationship to maintain where we come from. In Strathmore, this is something we hold dearly. We believe that the students and participants that come to this program, we have to have an all-round perspective in what they are doing. And the family background and what they are doing there is very important for us. So we believe that Africa continues to grow, much as what we are learning from the West is applicable sometimes. We still have to share that for us, the family is key. And we think that what the foundation is doing in different ways also helps us to support. And for you, gentlemen, ladies who are here, I think that's one thing I can challenge you today, that sometimes from what we teach in the business school, we find that as people go up the ladder, you have to sacrifice one or the other. I really hope the family is not one of those. At least would like you to keep very strong, looking back and building your values. So, since I promised to take not a lot of time, I think those are 3 values that we share in common, and I would like to stop there. I'll come back in a few moments to invite our chief guest, but for now, let me invite Mr. Ngugi Kiuna, the chairman of UBA Bank Kenya Limited, to come and make a few remarks. Mr. Kiuna, please.
Good morning. Our chief guest, Mr. Tony Elumelu, distinguished guests, ladies and gentlemen, let me also add my welcome to all of you, and thank you on behalf of UBA Kenya Limited for finding the time to spare with us this morning. This country of ours, Kenya, occupies a strategic location that makes it a natural business hub for East and Central Africa. It is an active member of most of our regional and international trade agreements and trade associations that are critical in promoting investor interests. Prospects for significant growth in the long term are good, with a projected average annual growth rate of about 5.8% between now and 2020, and probably higher, approaching 7% between 2020 and 2030. The liberalized economy, with a well-established private sector and other government initiatives such as Vision 2030, creates an ideal destination for investment. The recent landing of 5 fiber optic cables in Mombasa and setting up of digital villages across the country will improve ICT uptake by business, increasing overall efficiency. Kenya has a strategic port serving the wider East African region and a vibrant financial sector. Growth in the economy will also be supported by new investment in infrastructure, especially transport and power, including the new port that is envisioned for Lamu. Pro-market reforms, including deregulation and privatization, and a gradual improvement in governance and public sector are helping Kenyan business to improve. Recent drought does, however, remain a major challenge, while energy and infrastructure bottlenecks do persist, as well as shortages, I guess, of talent in certain sectors. The main changes in the long term, however, remain poor policy implementation and extraneous factors that we are sure are not insurmountable. Politically, Kenya has been relatively stable over time, thereby nurturing a business-friendly environment. The difficulties arising over the 2007 general elections are hopefully behind us now, and the country can look forward to the next elections with greater confidence than perhaps many expected in the period following the formation of our current coalition government. Additionally, the adoption of a new constitutional dispensation has greatly diminished the country's political and economic risks. The Kenyan economy, undoubtedly East Africa's largest, has experienced considerable growth in the past few years, driven by several factors. The presence, as I indicated earlier, of a strategic port in Mombasa, serving the wider East African region. Dynamic and well-developed private sector, as we intimated earlier, the fiber optic cables that are driving cheaper, quicker, and more effective communications, leading, for example, to expansion of telebanking and e-commerce. An educated labor force 85% of the workforce in Kenya is estimated to have adequate education, and 65% of them are young people. Integration with the East African community will boost potential market size in the long term, leading to preferential market access. Increased privatization and deregulation and creation of public-private sector partnerships are opening up new opportunities for Kenyan business. The increasing investment in infrastructure development, roads, rail, and power generation is infusing confidence in the future of the economy. A well-developed financial services sector and stable food prices before the current drought and the adoption of the Vision 2030 development strategy are all encouraging signs of the times ahead. But we have challenges. Capital is one. In emerging markets like ours, the dearth of financial resources is a key challenge, while our capital markets are relatively still shallow. The depth of the market does not provide entrepreneurs ability to raise long-term and inexpensive capital to fund their expansion. In addition, the lack of sufficient information for investors and cost of capital is also high, while venture capital is still virtually non-existent in our market. We also have challenges in poor infrastructure. A number of African countries are landlocked, and as we develop this Pan-African business concept, we must remember these landlocked countries, and the rail, air, and road network is not well developed to provide the leeway to access some of these huge markets, and the provision of improvement of those infrastructures provide additional opportunities for business in Africa. The high cost of power is an issue on the continent. Insufficient energy base and our reliance on hydropower is also a key factor in the cost of production for our companies. However, heavy investments are underway harnessing alternative sources of power such as geothermal and wind energy. Taxation. The lack of double taxation agreements impacts of transfer pricing policies without commensurate investment in improving the business climate does not help. Corruption, as has been said, can be and has been an issue, but revived and enthusiastic anti-corruption bodies across the continent are making inroads that will hopefully help improve the situation. Currency risks are an issue that those in this room who operate in Kenya will know how much they can impact our economy. Our ability to offer competitive products and services at competitive prices in comparison with producers in other countries may also be an issue in terms of developing our economies. Having said all that, the opportunities for developing business in Kenya continue to be positive. The possibilities and opportunities of developing Pan-African businesses based on any of the countries in Africa are huge, and those of us in Kenya look forward to the support of entrepreneurs like Tony Elumelu to help us develop these Pan-African businesses. It is a responsibility of all of us as Africans to develop this continent, and nobody will come to do it on our behalf. So it is indeed a great pleasure for me and for UBA Kenya to welcome Tony Elumelu to Nairobi. Tony was born in Jos, Nigeria in 1963. He is a research economist with a BSc and MSc degrees in economics at both graduate and postgraduate levels from Bendel State University and the University of Lagos, respectively. He also attended the prestigious Harvard Business School and is an alumni of IMD Lausanne, Switzerland. Tony holds an honorary Doctor of Science degree from Benue State University and an honorary Doctor of Business Administration degree from the University of Nigeria in Nsukka. Tony started his career with Union Bank of Nigeria in 1986 and served as the Chief Executive Officer of BGL Limited. He served as a Managing Director and Chief Executive Officer of Standard Trust Bank PLC since December 1996. Tony served as the Group Managing Director and Chief Executive Officer of the United Bank for Africa PLC until the 31st of July last year. Tony's corporate reputation was founded on his role in shaping the African financial services industry as a driving force behind the United Bank for Africa PLC. Under Tony's leadership, UBA evolved into a leading African financial services institution, transforming from a single country-focused bank into a Pan-African institution which serves over 7 million customer accounts in 20 different African countries and operates across 3 continents. Following Tony's retirement as Chief Executive of United Bank for Africa, he has advanced his entrepreneurial vocation and passion for philanthropy through Hayes Holdings and the Tony Elumelu Foundation, respectively. Hayes Holdings, which he chairs, is a dedicated investment vehicle focused on principal investments in a variety of sectors across Africa. Its investment universe extends from startup ventures to established high-growth companies. Tony is widely acknowledged as one of Africa's most influential business leaders. In 2006, he was voted African Business Leader of the Year by the UK-based magazine Africa Investor. African Banker magazine voted him African Banker of the Year in 2008. And the Federal Republic Government of Nigeria conferred on Tony the national honor of member of the Order of the Federal Republic in 2003. In 2009, the President of Nigeria asked Tony to serve on the Presidential Committee on the Global Financial Crisis. He's also has been a member of the World Economic Forum's Regional Agenda Council for Africa and the Bretton Woods Committee, which brings together senior leaders in the global banking industry. Tony chairs the Board Risk and Investment Committee of the Africa Finance Corporation and sits on the Advisory Board of Development Partners International. Tony also serves on the boards of several companies. In addition to his principal role at Hayes Holdings, he is also the chairman of the UBA Capital Europe Limited and UBA Medilife Insurance. It is indeed a great honor for us to welcome Tony to Nairobi. And Tony, we thank you for taking the time to come to Nairobi and to be here this morning, because he actually only touched into Nairobi at 3 a.m. this morning. So thank you for finding the time. Karibu sana. Thank you.
Thank you, Mr. Kuna, because you have made my job very short, and I'm happy that since you have interacted more with our chief guest this morning, then what you say actually carries a lot of weight. I just want to conclude that introduction of our chief guest this morning by again picking very quickly 3 things that we learned from them. I have a likeness for 3. The first thing is something we read in a book called Virtuous Leadership by Alexander Harvard. And the concept of virtual leadership looks at virtues that distinguish leaders from others. And if you look, if you have listened to Mr. Kuna and you read more, one of the things that you pick from Mr. Tony's CV is the virtue of magnanimity. In that book, magnanimity is defined to be the habit of striving for great things. Leaders who are magnanimous have dreams, visions, and a sense of mission, and also have a capacity to challenge themselves and those around them. If you look at the website for the foundation, you'll find a quote from Tony that says, "We identify and groom African business leaders and entrepreneurs to achieve the Foundation's central objective of meaningfully affecting Africa's prosperity. Nobody is going to develop Africa except us. Creating this foundation is obviously a great indication of this virtue of magnanimity. My second point, I already alluded to the fact of the family in my introductory remark. We are hopeful that Dr. Mrs. Awere Elumelu will be here with you, because we realize that in your foundation, she holds a key position as a trustee of the foundation. So again, this is important. Behind every successful man, there is a woman. So I want to take this opportunity to thank Mr. Elumelu for giving chance to the wife to actually shine. When I inquired, I was told, being a pediatrician, she has a lot of work to do with the children. And I think this is important. This, again, is a great thing that we can learn from what has been said about our key foundation. Just on the contrary, we know that behind every successful woman, there is a gentleman, there is a man. Okay? So I think we have to see that these things are working both ways. My final point that I pick from the summary, and I start with a quote. This is again from Tony. As a child, as a student, as a young professional, and now as an entrepreneur, Africa has always been the center of my dreams, my inspiration, and my prayers. We in Strathmore also believe in prayers. Our founder told us, St. Joseph Maria Escrifa, is a Catholic priest, but I don't think there's a priest around here, so it's quite sure that this is not a Christian sort of dominated institution. We have very strong Christian values. We accept people across the board, and we respect those foundation values. The founder told us, you have to work 100% as everything depended on what you do. But at the same time, you have to pray with an R, because you have to pray as if everything depended on your prayers. So you win both sides. And I think, again, this is something that I pick from that quote, that there is a strong understanding that we can do as much, and something else we have to go down on our knees and ask for forgiveness. So this is our principle, and I think we share that in common. Having said that, I think you'll now join me in welcoming our chief guest, Mr. Tony Elumelu, MFR, Chairman, Hears Holdings Limited, and who is also the founder and trustee of the Tony Elumelu Foundation. Put our hands together for our chief guest.
I'd like to thank the Dean of Strathmore Business School, the faculty members, elders of this country who are here, senior business leaders, fellow entrepreneurs, students, and my colleagues. I am honored to be here with you this morning and to have the opportunity to share my thoughts on this very interesting topic. Interesting because, to me, I believe that as this institution does, Africa, to a large extent, can and will be developed by the private sector. Government has a role to play, but the role of government to a large extent is to help facilitate or to help create the right environment. But it is when we begin to see the emergence of African multinationals that can employ people, help to grow our economies, that we will say that the age of Africa has truly come. So to choose this topic, I think it underscores to a large extent this belief that I have, and the one that this school shares, and the one that I think most people who are in this hall today equally agree with. Otherwise, the hall will be as full as it is this morning. In approaching this topic, I have tried to, as much as I want to simplify it. I have 1 hour, so I try to speak for like 30 minutes and take comments, questions, so that we make it fairly more practical. So what I'm going to speak today is largely from experience. And I've chosen to tell a story. So I shall tell a story, and after telling the story, I'll try to extract the learning points from the story. Then I will proceed to draw a few conclusions and leave us with 2 parting shots at the end. Now, the story I've chosen is a story about an institution I have been associated with, one that also operates in this country. We're talking about building Pan-African businesses or building Africa-wide cooperation. So I've chosen the case of United Bank for Africa, UBA. UBA, why did I choose UBA? Beyond the fact that I have been associated with the institution, and it makes it easier for me to tell the story that I know, is that depending or irrespective of how you want to define an African multinational African corporation or Africa-wide corporation, UBA would pass the test. As the chairman of UBA Kenya said not long ago, UBA operates in 20 African countries. So if you define by geography, it means UBA is actually multinational. In terms of size, it's significant. In terms of industry of play, financial services is key to economic development of most countries. So I've decided to use the story of UBA in approaching this discussion this morning. Now, the story starts. And please, Buba, you're my timekeeper. 30 minutes to tell this. In 1997, some of us decided to acquire a distressed bank. You know, financially, when a bank is distressed, it means it's shut to public. You don't have customers go to the bank is no longer in clearing, the bank, in fact, completely shut down. So we acquired a bank, a commercial bank, that was distressed, and commenced the journey for turning around the distressed bank. At the time, it had just 5 branches, and we had ideas. And it's good to share this story because Sunday School has Business Incubation Center. We had ideas, but we didn't have all the money we needed. So we did, at the time, what is called today debt equity swap. And through this program, we were able to acquire the bank. What do I mean? The bank had depositors they owed, and so we approached the depositors and got them to convert their deposit to equity. Some converted and kept in their name. Some converted and said no. Some said no. We have confidence in this group. If you can take over our liabilities or this bank's liability exposure to us and pay us over a period of 2-3 years, we're fine. But we do not want to, our deposit, keep in view that we're going to lose the deposits. We don't want to leave our deposit this bank. So through these schemes, we're able to acquire significant interest in the bank. and we commenced the journey. But first thing we did in this journey of a distressed financial institution in 1997, that today is UBA operating in 20 African countries, presence, and by the way, UBA is the only African bank that is operated that operates in New York, in US, and registered and so first thing we did was to have a retreat where we sat together to craft the strategy and the vision for this new organization and where we want to be, how we're going to get to where we want to be, which kind of customers we want to serve, what value propositions do we offer to these customers, and on and on. We were about less than 100 at the time. We sat and we came up with what we called the 3-tier strategic intent for the name of the bank at the time, Standard Trust Bank, not UBA. And so we agreed. So the first tier strategic intent for us was we want in 10 years' time to become one of the top 3 banks in Nigeria. And after that, we want to become, second tier intent, we want to become the biggest commercial bank in Nigeria. And after that, we want to be a key player in the African financial services industry. Keep in view, this was a distressed bank. And so it talks about the power of vision. We created the 3-tier intent and everyone understood it clearly. So there was alignment of interest and also everyone was quite clear about what we wanted to be. And we put time periods to this. The next thing we did was to engage a few more key staff to support the process. And from 5 branches, under a period of 7 years, we have grown the bank to 100 branches and became the first bank in the country to be integrated online real-time IT. So you can enter any branch, the first bank with the highest brand network. 100 branches were integrated online real-time. You can enter any branch of Standard Trust Bank and transact across the country. And things started changing. So we had a second retreat. I said, okay, the first year intent was to become one of the top 3 banks. At this time, we had become top 5, one of the top 5 banks. So we had the second retreat to revalidate and see, should we change our tier 2 vision or are we still on course? We decided that we should revalidate it and continue along the same line. So we then decided that to move from top 5 to number 1, we need to do some transactions by way of acquisition or combination. So between this period, we raised capital from the market 2 times. In banking business, you need a lot of capital to do transactions. So we moved, and in 2003, we started exploring the possibility of merging with one of the top 3 banks in the country that can defraud or acquiring. But then small bank acquiring big bank was a bit tough. However, in 2004, we concluded a transaction where the 5th biggest bank in the country, Standard Trust Bank that we were running at the time, and the 3rd biggest bank in the country, United Bank of Africa, came together. But as you know, in all mergers, there's almost always an acquisition. So Standard Trust had acquired strategic interests, about 33% of UBA, then merged. And that was how in 2005 the merger occurred. And we automatically became the number 1 bank in the country. And we had to deal with the issue of integration, mergers, and by the way, that was when I met Mr. Keno's son, who was working for McKinsey at the time, and was one of the people that came to Lagos to help consummate the transaction. So we built this. At this time, 2005, UBA had 428 branches across the country. And we said, okay, we want to be the leading bank in the country, and with some margin between us and the next bank. So we defined the parameters again: deposits, brand network, customer base, ATM, etc., profitability. And we crafted our intent. That's okay. Number one, Nigeria, first year. Two, one, a Pan-African bank, one of the leading banks in Africa. And three, an African bank with global presence. Again, we started this journey. So the first one, within a period of under 4 years, we had developed or grown the branch network to 700 branches across the country. We had fully integrated the bank. We had ATM machines, excess of 3,000 across the country. We had rapidly grown our customer base. And we're offering good products to our customers. But the second tier intent, growing a Pan-African bank, was yet to start. So we commenced the journey, and within a period of 5 years, we were able to grow the new UBA into becoming a Pan-African bank with presence today in 20 countries, including Kenya, across Africa. This is the small journey or story of an African institution that has grown from a one-country institution to a Pan-African one. In 2010, BCG, the Boston Consulting Group, did a study on what they call, I think, the African champions, or the African champions. And they came up with about 40 champions across Africa. And UBA and Dangote Group were two Pan-African institutions that emerged from Nigeria. For those who read the report here, most of the institutions came from North Africa and South Africa. But UBA became one of those countries. And one of the criteria they used was this issue of size and also the spread of UBA across Africa. Today, that Pan-African ambition that UBA had is a reality. Then there's a third tier intent, which is to have presence in global financial centers. So today, UBA is in New York, UBA is in London, and UBA is in Paris. So, and beyond all of this is the fact that UBA is able to, today, has close to 25,000 Africans on its as staff of the bank, and plays key role in growing, supporting economic transactions in these countries, helps to achieve financial inclusion for these countries and these economies, helps to create a payment platform that helps people within Africa and these countries to move money from one place to the other, and has helped in so many other ways that are not even directly related to banking. For instance, in Kenya, thanks to the leadership here, I think it was through efforts of institutions like UBA that a Nigerian, for instance, can fly into Kenya and get visa at the airport. And so what's in all of this is the beauty of growing Pan-African institutions. There's so much for Africa to gain. And there's need for most of us to see beyond the shores of our home country when we're thinking of growing businesses. But let me read this story and talk about the learning points from this, because that is where we begin to connect the dots. So, the learning points. 1, it's good when you want to create, if you want to create a Pan-African institution, to have a vision. You know, for us, it started with a vision. And part of that vision was where we saw beyond the shores of our home market. We saw Africa as our market. So for business leaders here who are interested in creating a Pan-African institution, an African-wide cooperation, go back a bit if you've not drawn or come up with a clear vision that encompasses this aspiration. Put one in place and get the people who work with you, your key lieutenants, to buy into it. Debate it. Ask yourselves, because there are also challenges I'll talk about in growing a Pan-African institution. At times people will want to say, let's just remain within the confines, within our own geography. There's no need going further. But there's also beauty in diversifying the earning geography the geography of your earnings. Second lesson is develop your strategy for making your vision happen, for serving the customers you want to serve. So for instance, when we started our Standard Trust Bank, because this was a distressed institution, and based on our reading and understanding of the market at the time, we wanted to serve the mass market, not bottom of the pyramid mass, but we wanted to be a retail and commercial bank. And so we came up with certain ideas, innovation to enable us to achieve this. That was why, for instance, we were able to link all our branches online retail. And with that, we changed the structure of our business significantly. Because first, we allow people who were customers of Standard Trust Bank to transact, come in to the branch and pay money, transfer money to their children who were schooling elsewhere. But later we open it up. So you don't even have to be a customer of Standard Trust Bank for this to happen. And that's just almost destroyed the real competition. So it's good to have, first, where do I want to go? The destination. How do I play to achieve this? Very important. The third point is you need capital to roll out business, to do a Pan-African business. You need money. At times you might be lucky to have your own money. If you're not lucky to have your own money, I believe from our own experience, most of the so-called advanced capital raising techniques you have abroad, they do work here. We did an acquisition, as I said, through a debt equity arrangement. We did IPO, we IPO'd the bank, they did initial public offering, and the DG of STEC this year, so I'm sure she'll be happy to support people who want to do so here. We did this first time, second, even to acquire UBA, we had to raise money again from our shareholders, but our shareholders were happy because we paid dividends, we grew value for our shareholders. And so you need to think about capital. At times, I don't support the idea of people using debt, just go and borrow money from bank to expand. You could do that, but you also need the right mix and come here. Otherwise, the interest burden could actually affect your ability to achieve the objective. Because as you see, as I will share with you, the waiting time for internationalization within the region is long, or can be long. Next is human capital. You know, I would say that one of the key reasons for the success that we achieved so far is the fact that human capital was very, truly important to us. And let me explain this. But by the way, up until I left UBA. I had HR director advice, HR advisor who is here over here. That to me, that shows further the importance of getting things done through people, especially if you want to expand quickly, rapidly beyond the shores of your country. To me, as CEO, when we were in Standard Trust Bank, I was involved in recruiting drivers. And this one debate, I'm ready, and anyone can take me up on this. And why would a CEO spend time to recruit a driver? Is that the right way to spend the CEO's time? But I say yes. HR is as important, if not more important than capital. Because when you get capital into a business, capital does not operate itself. Capital is operated, used, utilized by people. And it is important you get the people equation right. And in fact, one wrong hire in a new business can be very detrimental to the success of the business. So it was so important that I knew 100 branches, I knew almost, it sounds ridiculous or difficult to believe, but I knew almost 98 or 99% of the staff who work for the organization. About 3,000 staff. And I knew certainly what almost what each staff did or does in business, apart from front tellers. But even I know you're a teller. And we developed a good performance measurement system. And we were quite clear about what people wanted people to achieve. And for everyone that worked in the organization, there was positive alignment and mobilization of everyone towards the goal. We want to be this. Everybody wants to be this. I want to be this. So it was so clear. People woke up in the morning, and my viewpoint, most people, maybe not all, and we're happy to go to work because of that thing that was driving everyone. We said we want to be a role model for African businesses. We don't want to see ourselves as a role model for African businesses. So we want to do this. We want to show that good things can come out of Africa beyond sports and war and military coups, etc. And so it was every one of us keyed into it, and it helped. So, I'm spending a bit of time on these HR issues because, in fact, as you even go beyond one country, it becomes a bit more complicated. You've got different laws, different policies, different cultures and social issues, etc. So for organizations and business executives who are thinking of growing, first, even in achieving your vision. And two, if part of your vision is to become Pan-African, that is going beyond your shores, then you need to have the people equation well sorted out up front. It's the right and very fundamental foundation that you need. Next, long-term focus. If you want to grow a Pan-African business, you must be long-term in your outlook, in your focus, in your actions, in almost everything you do. And you must also get the people who work with you mobilized along this line. No, it's almost difficult, I would say impossible, to say you're playing an African strategy or you're playing Pan-African strategy and you expect, okay, maybe if you're in trading business, I don't know, but like in our business, UBA has committed close to $1 billion in growing Africa, UBA Africa. The profits are just trickling in now. But because we are long-term players, because we are marathon runners, we know that, and we understand the business, and we know the fundamentals are right. We know that it's a matter of time, but when it comes, it's going to come huge, big time. But if we had short-term orientation, there's no way we'll be able to prosecute this, because the stock price will fall if you don't deliver. It's like a case of one parent company supporting all 20. And you might not be, in the short term, as competitive as people would expect you to be, especially if they are comparing you with a one country institution that does not have this kind of aspiration. So for yourselves, or for those African entrepreneurs, and I will come to this later, because that to me is the way to go. For those African entrepreneurs who are here, who are listening, who are interested in running institutions beyond the shores of their country, they must have long-term focus. But indeed, if you have that long-term focus and you have the right fundamentals, you have the staying power, it's a matter of time. But when it comes, it's going to come big. And the gains are obvious to both yourself, host economies, and to Africa. For Africa, there's economic integration. No better way of achieving economic integration than through business. No better way. You can have all the union talk, etc. But when business people move, they move because they are rational, they operate in a certain way, free market, etc. They want to make sure that those environments are created. So long term is very important. To the business person or company, you're diversifying the geography of your earnings. And so one situation in one country does not paralyze your business. So you have operation in 20 countries, 21 countries. We pray for stability across the continent. But if there was any problem in any one country, you have operation in other countries, your shareholders are better for it. But keep in view in the short term, those shareholders might not be happy because you're playing this kind of strategy. But if you see Africa as one market, and if your fundamentals are right, in the medium to short, long term, people will pay a premium for what you're doing. So the message here for me, this is one of the strongest messages I want to deliver to you. If you want to be Pan-African, if you have the intent, the aspiration to grow an Africa-wide corporation, think long term. Think long term. I put here discipline and sacrifice. You know, when you want to do this kind of thing, grow a company across the continent, you have to show leadership by example, you have to be disciplined, you have to be hardworking. But remember what the dean said, don't be hardworking at the detriment of losing one part of the core, which is the family. But you have to be hardworking, you have to lead by example, and you have to be extremely disciplined because, you know, it's about trade-offs. There are things you say, I will personally and even at corporate level, you will not do because you want to achieve this aspiration. You want to accomplish this. So it's very important to stress that point. You know, one of the challenges we have, and real life challenges for us as Africans, is our communal value. You know, the way we live. You know, so family ties issues. There could be challenge. There could be pressure on you to recruit the wrong people, or to make your recruitment process not as transparent as it should be, because of family ties. To make certain judgments, business decisions, because of family pressures, family ties, etc. And in fact, at some point, people might see or think that you're even a societal misnomer. You're not appropriate. You're not behaving appropriately because this is how the society expects you to behave. But if we keep in view the fact that there's an objective, you want to create a Pan-African institution that be a role model for others, and you like others to also emulate, then there are things you begin to change, to do things differently. So in the short term, people might think you're not doing the right thing. Who does it think, or do they think they are? What kind of value is this? But over time, people will move up to that level, and to help you to achieve your intent. Resilience. Resilience ties with this idea of being long-term. But you know, in business, especially when you're trying to grow, across regions, especially in our difficult operating environment, terrain. You will face a lot, not could, not may, you will face a lot of challenges. But I've always told people that in business, when challenges present themselves, professional challenges, don't give up. Or approach them professionally and learn from that and let it make you a stronger institution. You know, I would say that when we were trying to start our international rollout, especially in African international rollout, it was difficult to get some African countries to grant licenses, banking licenses, to a Nigerian bank, as it were, or as it was at the time. You know, it was tough. I recall Ghana to get license. Ghana is Nigerian neighbor, so to speak, but to get the government of Ghana, Central of Ghana, to give us the first license, it was tough for so many years. We kept at it, but finally got the license, and guess what? When we got the license, the governor of Central of Ghana, the president of Ghana told me, said, Tony, if you guys operate well, you'll be opening doors for others to come into Ghana. And after 2 or 3 years, the license, I'm sure not less than 10 new banks have entered and started operating in Ghana because of our move. Again, keep in view one of the statements I made before, that true integration in Africa can only be led by the private sector. What governments couldn't sit together to achieve through private sector initiatives. Today, a country like Ghana that was closed will have like up to 10, even in Kenya, I believe. When we wanted to operate in Kenya, we were told first, I think 43 banks, no more. And I thought it was a magical number. Kenya, Uganda, Tanzania, no licenses. But today, while we be in Kenya, other banks are operating in Kenya. While we be in Tanzania, while we be in Uganda. And so you see how Africa truly, through private sector efforts, is becoming integrated. And so somebody can leave Kenya today, like UBA has an agreement with Kenya Airlines. Someone can leave Kenya. Someone can leave Kenya today with AfriCard and be able to transact business across at least 20 UBA present countries. So resilience is very important when you want to roll out, because there are challenges. Being in manufacturing, there might be issues you encounter, but you want to grow an Africa-wide cooperation, be ready for it, don't give up when it happens, and we also, as you know, have institutional rigidity and voice in Africa that could make life difficult for every one of us. But that shouldn't make us give up that intent of growing a Pan-African institution, which indeed we really should be growing. Professionalism, I've talked about that. Now, keep in view the story of how we became Pan-African. I'm not going to, so even in visioning, in strategizing, in being optimistic, etc., we need to be realistic. So you first have to grow, in my viewpoint, an iconic national institution to a large extent, or an iconic institution in your sector. Get expertise, fine-tune it, get it right before you export that product or service, so that you become a good ambassador of the African private sector, not necessarily your country. So I call it acquiring the critical mass. Critical mass in your geography or critical mass in your sector. You know how to do it well before you move to the next level. So for like us at Standard Trust UBA, first intent, be the leading financial services institution in Nigeria, be strong, etc. And based on that, second tier intent, move to critical mass. I've said before, see Africa as your market and anyway, you can't be thinking of growing a Pan-African institution if you see only your country as your market. So see Africa. And lastly, but most important, or equally important, is the issue of governance and institutionalization. We must build our institutions to last. We can't be thinking of growing a Pan-African institution that will die with me, for instance, or die with the dreamer, or die with the chief promoter, the founder. You know, we must begin to think of what others have done in other countries, other economies, legacy institutions passing from one generation to the other. And it doesn't just happen by you wishing for it to happen. It happens by deliberate actions that we begin to take while we are alive. So if we are thinking of growing a Pan-African institution, we must start the building blocks, start preparing the institutions with an end point that, you know, indeed, which is true. The chairman of UBA Kenya, I met him just this morning. I didn't know him before, but I knew his son. We have a mechanism put in place, not driven by individuals, that makes certain things happen in certain ways. So similarly, for people who are, because even if it's a big institution you already have, but you're thinking of going Pan-African, rethink. Do it yourself or get strategists and consultants to help you think through everything. What kind of governance structure and framework and mechanism do we have in place to make this institution last forever? And what kind of governance framework and mechanism do we have in place to make this institution, to institutionalize the institution and depersonalize it so that whether we're there or not, it will succeed. This is very important in growing a Pan-African institution, or even growing your own institution within the country. Okay, so let me try therefore to begin a few conclusions. First is conclusion, challenge, etc. I think, and strongly so, that we need, as Africans, because we indeed, some call it the last frontier economy, the last market, Africa is rising, etc., all kinds of things they say, but we need to have many UBAs come up in Africa. We need to have many companies deliberately becoming Pan-African, operating across boundaries, because there are so many advantages in saying for this to happen, or so many advantages in this happening. We need to have, I was asking myself as I was preparing this myself, should it be 5 every 3 years or 5 every 10 years? Whatever the number is, but we should be adding. People should look at the statistics of Africa every 2 years, every 3 years, and say, wow, this continent has moved. Look at this company from Malawi is now across Africa doing this, creating employment, paying taxes, helping to develop the sectors that that industry, that business is playing. If it's banking, helping payment system, helping to achieve economic integration, create employment for people, pay tax, so many things. So I believe, I'm a firm Pan-Africanist in business. I believe that we need to have a lot more companies grow and go beyond the country, the national geographies into other economies, and begin also to do great things. To a large extent, therein, in my viewpoint, lies true economic integration. And not just economic integration, so many integrations, culture, because if you send people across countries, then people begin to learn and know and understand each other. However, for this to happen, for Africa to be able to produce 3, 4, 5 multinationals, every 5 years, every 3 years, every 2 years, every 1 year. The right environment must be created. We must put in place the enabling environment for this to happen. And the responsibility to a large extent of this happening is the public sector. African governments must play their role. African governments must set free the African private sector. They must create the right environment for the African private sector to do well, to compete with their mates, with their colleagues, with their counterparts, with their peers. You know, you automatically are disadvantaged where you do not even have means of transportation for your goods, where you cannot find electricity in some countries to power your production line, where healthcare is an issue affecting your capability and capacity to get the right people, healthy people to work, where education is challenged. So there are both hard and soft infrastructural issues and infrastructural issues that our public sector must provide to set free the private sector in Africa. Having agreed that it's good for the private sector in Africa to do well, to transcend borders, employ people, do everything, so many things, and that to do that, we need to have the right environment. Those who have the responsibility to create the right enabling environment should play their own role. But when they create their own, when they play their own role, the private sector must rise up to take advantage of the platform created by government. But today, that this does not exist, is it enough excuse for African private sectors to say that they cannot grow beyond countries? No. It can only be more difficult. It can only be more difficult. In fact, the more African entrepreneurs are involved in doing businesses across countries, the more we create the awareness in our governments that you need to do this. You guys need to do this. You need to open up the borders. You need to do these certain things so that businesses can thrive. So it's a call to me, conclusion that we need more successful companies. We need our leaders to create the environment. But whilst our leaders are struggling and trying to create the environment, by the way, there's progress across Africa. We're going to see it. We must, our private sector entrepreneurs, not relent and must continue to engage with government and also push and establish contacts amongst ourselves so that we need to play more role in the area of advocacy and policy shaping to make sure we have the right environment to do business. Because at times, government itself does not even know what is good for it. And so, my parting shots as I conclude so that we can take make it a little bit more interactive. 2. One is, I commend what the dean and the faculty in the school are doing here. I like to see education is key for Africa, the whole world, but Africa in particular because we're alive. I like to see us have more business schools. All of us should play a role in seeing this happen. And the business schools should help us, because we're talking of how to create Pan-African businesses. Business schools should help us, African entrepreneurs, African students, African aspiring entrepreneurs, and people who do business in Africa. Let's have more case studies. More case studies. Let's have more case studies of successful African businesses that can be role models for others to emulate. Learning points, obstacles, how they did it, so that not just Western type case studies. The second and the last is, I call on all successful African entrepreneurs all successful African entrepreneurs to embrace what I call Afri-capitalism. And what's Afri-capitalism? A kind of thinking now that you can make profit while you do good. Let us begin as African entrepreneurs or business leaders who are endowed, and I know at my table there are some who are extremely endowed, and I believe they are doing very well in their own ways too. But indeed, I think that the age of charity gives grants for Africa to a large extent is over. I think we can channel our resources more productively. I think we can create economic prosperity and social wealth together. I know Michael Porter calls this shared value. I call it Afri-capitalism. Why do I call Afri-capitalism? In Africa, there's capitalism, but inherently in us, as Africans, we're communal. We support each other. We support one another. And so let's take that philosophy beyond the social realm let's use it to develop Africa. So we want to give something to some. Let's begin to create fishermen in Africa. We've seen the age of donor funds, etc., for decades now. So it's time to ask ourselves, how far have we gone with this? And is that truly what will help develop Africa? I think that the future of Africa lies, as I said before, in our hands, to a large extent in the private sector, and to a large extent in our ability, and that's why I agree with this group totally, to create entrepreneurs, business leaders. Create that spirit of, let's make investments that will help achieve economic prosperity whilst creating social value. I'd like to end here and take some comments from you. Thank you. We have how many minutes? How many minutes? 40. 15 left.
Okay, thank you very much, Mr. Elumelu, for that very inspiring talk and for telling us that Africa can only be saved by the private sector. We are going to take only 3 questions.
No, it's okay. No.
Well, okay. Only 3 questions, and please let me ask you to kindly ask a question. Don't give us a story, just ask a question so that we are able to manage time. We are not complaining, we wish we had more time to give to you because that was an interesting talk. I have 2 gentlemen who have microphones, so if I see your hand, I'm going to choose the questions.
Can I moderate it myself?
Yes.
Thank you. Okay, so we have how many minutes, Weaver? 15 minutes? 10. So let's see how quickly we can rush. If you make it fast, we can even take up to 5. So let's run. 1, so we'll give numbers. We have the gender sensitive. 2. So let's go to the back. 3. 4. So I think, okay, 5. I think 5. Did you raise your hand, the lady? No. Okay, 5. Okay. So let's go. 1, 2, 3, 4, 5.
So thank you very much. My question is, we do think that my name is Dr. Jenga.
Can you give me the mic, please?
My name is Dr. Jenga, and I am the founding dean of Stratford Business School. Thank you very much. My simple question is, we need to play an international role in bringing foreign direct investment in Africa. But the foreign direct investment in Africa that we have seen sometimes is skewed towards the scientific experience and growth in the West. How can we negotiate our our case in Africa better? And how can we integrate with Europe? How can we integrate with China? How can we integrate with India? How can we integrate with the Americans and South America, which seems far off from Africa? Thank you very much.
I think we'll just take the 5, then we intervene. I'll take 2. Okay, so number 2.
Good morning. My name is Jane Fakaras. I'm the CEO of Profinet, an experiential agency. I'm very Pan-African, but I just wanted to ask, how did you deal with corruption when you're setting up obviously UPA? Perhaps maybe you are bigger and so on. Perhaps have an idea, small agency, and I'm going to do stuff. And you want to set up a business, and you're meeting a lot of debt and corruption. They come from the lawyers themselves from that country. Maybe you give money and they take off, or they don't give you a regard. How did you deal with corruption? Thank you.
Third one.
Thank you, John, for that very enlightening talk. My name is Paul White, CEO of African Alliance Asset Management. My question is with regard to how did you manage the growth? Sometimes when the company grows beyond the country and beyond the borders, how did you manage that aspect of having a multinational company work on the structures that you put in place to ensure that it functions consistently? And maybe if I can squeeze in another question.
Sure.
We see a lot of West African companies coming into East Africa. We are platform, we're not seeing as many East African companies in West Africa. Before, that's why that.
My name is James. What is the role of religion or bodies in expansion? And if we are to give you a minute to speak to East Africa community leaders, what are the 2 action points you going to take to grow the Pan-African business?
Sorry, what was the first one? Did you say religion?
What is the role of religion or bodies?
Religion.
Yes,
Oh, religion.
yes, religion and plots, yes. And what do you tell East African leaders? What are the 2 action points we need to grow Pan-Africa?
Last person.
Thank you, Tony. I am Dr. Felix Solari with the Excelsior Journal, also senior advisor to McKinsey & Company. So I'm excited to hear the role you play in growth of UPA. My question is about talent. So there's a lot of leadership fora that exists within Africa. Several of them happened recently in Kenya. There's also several initiatives that are happening at the education level. How did you develop the mid-level management to allow you to actually scale up and move into the other countries in Africa? Because I think that's a critical missing piece for us here in this location.
Okay. Is that the last? That's the last, okay. So first is the question on direct foreign investment into Africa. What do we need to do to attract this? And I think the double barrel, the second part of it is how do we get Africa to engage with the rest of the world? Let me start with that. I think for Africa to engage with the rest of the world, from my viewpoint, there are a few things we need to do. I think, take for instance, you hear China deals with Africa through different countries. So there's no Africa strategy for engaging with China. Imagine if we had a well-articulated Africa-wide strategy for Africa dealing with China. So China wants to deal in Africa. There is blueprint. 1, 2, 3. This is how we're going to engage on mineral exploitation, land acquisition, this and that. It will change a lot of things. And things will be more transparent, more common, and it will actually, that engagement will help development better. I think that's the question he asks, and very fundamental point. In my viewpoint, again, it's another call on the private sector in our continent. we need to begin to engage. The African private sector needs to engage. Then we carry government along. Ideally, you'd expect the AU to provide a strategy for Africa's engagement with the rest of the world. Blocks. But where that is not happening, the private sector must lead. We should commence convening. We should begin to talk to each other. We should begin to have leaders across geographies in Africa driven by the same objective purpose, sitting together, discussing, looking at issues that are priority to us as related to economic development and advancement, and begin to push this across. So I think that's, to me, the answer to that. That's how we approach it. The first one, therefore, the foreign direct investment, is simple. Money, as they taught us in economics, is fungible. And money does not discriminate. It goes to where it's welcome. African leaders must open the economies for competition. We must simply, beyond all these road shows, trade fairs, etc., to me, it's a waste of money. Wrong approach. If you embark on all the road shows on earth, and someone wants to set up a factory in your country, looks at the World Bank competitiveness report, or doing business, ease of doing business report, or even talks to people. How long does it take to clear goods at the wharf? Maybe 1 month. Singapore, how long does it take to clear goods? 2 hours. Where will you take your money to? So to me, it's simple. We need to confront the issue of competitiveness across Africa. It is when we begin to deal with it that true economic development again will occur. Anyway, because here we're dealing with rational people who will take their money to where they think their money is safe. Okay, second point, corruption. When I spoke, I used a word, I said institutional rigidities. That's part of institutional rigidity. And indeed, we have seen progress in acquiring banking licenses across Africa. We have seen from a time a few wanted to delay the process. I said, okay, no problem, let it be there. One day we'll get the license. But increasingly, and I must give this to African leaders, political leaders, there's beginning, I think we're beginning to understand that people coming into your country to do business is good for the country. And so they are beginning to drive change, but we still have some other rigidities, taxation issues, a lot that we must deliberately push. And again, that's another case for like a convening, broad-based convening for Africans to sit together and say, so that we can engage with our unions, all this AU and co. What is it? Let's engage and say, we need this. Government should help us do that across board so that business can do well. One of the legitimate aspirations of every government to create employment for their people. Governments don't create employment. Government can only catalyze the economy through the kind of competitive environment they said that will enable private sector to do well and create employment. So the day government begin to understand that there's a nexus between what's important to government and what the private sector is looking for, then I think we begin to get it right. There's still a few small disconnect. We need to make government understand that the intent is the same. We make money, but private sector makes money, they create employment, they pay tax, they help government also to create more revenue. Anyway, so my point is, it did to a lot in our industry exist, but there's been tremendous improvement. So people at times just say, let's wait, or you go talk to the political leadership and say, we want to come to your country. This is not happening. I'm sure they will call the people in charge and say, give them this license or whatever authorization they need. The third point, how do you manage, or how did we manage growth, and what kind of a framework did we put in place to manage growth? Very important, because one of the challenges of growing a business is how do you manage growth when it occurs? We all aspire to, okay, so how do you manage growth? We put certain institutional frameworks in place, For instance, at UBA became too large at some point. So we created UBA Africa, UBA Nigeria. In fact, right now UBA is going through a holdco. UBA is transiting from one institution, one bank, to a financial holding company that will now have UBA Africa, UBA Nigeria, and UBA Capital Holdings. UBA Africa doing something, Nigeria doing something, all competing under a holding group. And that's administratively, but there are a lot of other things we did to make sure that we're able to, we anticipated growth, because remember we rolled out rapidly in Nigeria, so we know how it is, what it takes to roll out. Anticipated, put certain institution frameworks, etc. in place, which also deals with the issue of talent management. Talent management, what we did, we set up what is called UBA Academy. So UBA Academy is like UBA University for training our own people. So all year round training. In fact, Michael Porter just left Nigeria just some days ago, where he took a competitive strategy course, broadcast across the UBA network, 20 countries, all linked up online every time, using the video conferencing facility, assembles and just push the message across. So yes, we use UBA Academy extensively to develop people. We also acquired people who existing skills, but they were retrained, cultural issues, etc., bringing people together. But that doesn't mean we achieve 100%. We still had challenges here and there, but we kept improving as time went by. Then the last one, regional blocks. Okay, regional blocks. What was the question again? Regional. Okay, the role of regional blocks in economic development and in helping our unions, in helping companies grow. That's the question, right? Okay, I think most unions, I believe, were set up for three objectives. Okay, one is free movement of money, two is free movement of people, three is free movement of goods and services. And so what we're talking about here, to a large extent, should ideally be driven by our unions. But are unions actually effective? Do members of the unions want to give up the sovereignty on certain issues? How far are we, how far do countries in these unions want to even go? So, but I think that the private sector can push. We can push this, take for instance what I said before about UBA Kenya. For the Kenyan government to be responsive, and I commend the government of Kenya, based on UBA's representation to the government. We are members of African Union. If someone doesn't have a visa, she need to grant visa at the airport to enter, etc. Through that action alone, we have helped to advance one of the objectives of regional unions, free movement of people. So my point there is, ideally, these unions should help to create the kind of markets, the kind of incentives, the kind of framework, enabling framework, etc., that will make all these things happen. But from my experience, especially where I come from, the West African region, there's room for significant improvement. I don't know if it's different here. And so somebody asked a question, if you were going to, so you now ask therefore, if you were going to advise the Kenyan private sector or Kenyan entrepreneur who wants to become multinational within Africa, what would you say? Two pieces of advice. One is governance. People have argued a lot of people when they say capital. I say capital is secondary. If you have the right governance framework and mechanism in place, you even attract capital into your company. So I think governance, which seems very little, intangible, but yet very, very important. So I would say, let's rethink the way we do our businesses and make sure we institutionalize, we put the right governance framework in place, and that will help us achieve. The second thing is competitiveness. If we have association of manufacturers, different associations in this country, all of us in our respective countries and ultimately across the continent should begin to engage with our government. They must see through their policies and see how their policies affect our ability to compete with our peers in the continent and outside the continent. Thank you.
Thank you very much, Tony. Ladies and gentlemen, we are now coming towards the end of our program. I will ask Patricia Murugami, the Director of Executive Education at Strathmore Business School, to come and give the closing remarks, after which I will come back and make the final announcements. Patricia.
Good morning, ladies and gentlemen. In the true Kenyan spirit, I want to welcome Dr. Edward Mungai, our Dean, together with Dr. Jenga, our founding Dean, to come so that we can give two gifts to our two key guests. I'd like to welcome Ngugi Kiuna. Please. Welcome. Let's give a true Kenyan clap to Ngugi Kiuna.
It's the black box.
As we welcome Tony Elumelu, I ask you to do a standing ovation. Welcome, Tony Elumelu. My humble duty this morning, 297 of you confirmed, 360 showed up. Thank you. First and foremost, Tony Elumelu, African business leader, for an engaging, insightful, sincere story of UBA, United Bank for Africa. Have you seen the connection between the name and the spirit? So when you're naming your companies, think about what you want to achieve, because chances are it will be fueled by how you name it and the governance and the board, as well as the talent that's driving that business. Thank you very much. Dr. Wiebe Buer, CEO, Tony Elumelu Foundation, thank you very much. Ngugi Kiuna, Asante Sana, the host chairman, UBA Kenya, and an effective director, program alumni. Thank you. Dr. ETS Adriko, chairman of UBA Uganda. Thank you. Joined by Dr. Ben Mbonye of the Uganda board. Thank you. Tunashukuru General Robert Mboma, retired chairman, as you can guess from the language, UBA Tanzania. Thank you. CEO Africa, Edgar Gabriel. Thank you very much. Emeke Iweriobor, Deputy MD, UBA Africa. Thank you. Muyiwa Akinyemi, MD Kenya. Thank you. And the board of directors from Zambia, Mozambique, Tanzania, Uganda, and Kenya, a truly Pan-African board. Thank you. In fact, as I was listening to you speaking, I thought about what Martin Luther said, that life's most persistent question is, what are we doing for others? So the board, together with your talent in the respective companies, thank you for beginning to answer that question. Our alumni, You know, you can tell enlightened alumni. If you're sitting next to alumni, you can see them. Their eyes sparkle. They have fire in their belly. And they have a true passion to transform society, the organizations which they hail from, their families, through our brand promise of true transformation through virtue. So that those of you who are potential participants and alumni can feel it, I want to thank the alumni from the MBA program, the alumni from the Advanced Management program, the alumni from the Program for Management Development, together with the alumni from the Owner Manager program, the current participants as well as the first class. I hope you're truly inspired by this story of entrepreneurship. The alumni from the New Manager Leadership program, Senior Manager Leadership program, the Leading Woman, Executive Healthcare Management program, Leading High-Performing Healthcare Organizations. I also see alumni from the Construction Project Management program, Real Estate program, the Effective Director, and many more. Continue your learning, continue transforming not only Kenya, but beyond the region. Thank you. I also want to thank our partners, the public sector, some of our partners, KPMG, the press. I want to also thank the Strathmore University students who graciously give up their seats. You are the future of this country. I want to encourage each of you. Many times our participants are always challenging us to ensure that we deliver programs with local case studies. I want to underpin what Tony said earlier, that we want you to open out your doors to our faculty to write cases, not only of successful businesses, because we can learn from mistakes, and that we move away from the shame, fear that we seem to sometimes have when we've made a mistake. Because if we rise up from the mistakes that we have actually gone through and take the experience and teach generations beyond us, chances are what he said about ensuring that there is enough for us all and that we build institutions that last will come to a reality. So open your doors to us when we request you to allow us to write cases or to come and give keynote speeches and sessions within our programs. Finally, I know you have seen the situation that is in the country, Kenyans for Kenya. We have breakfast. Do not waste. We want to ask you to wait. We will call you table by table to please have breakfast with us so that we can partake and network beyond this. And finally, D.L. Moody said, do all the good you can, to all the people you can, in all the ways you can, for as long as you can. I wish you a great day. Thank you.